This might be one of the craziest headlines we've ever had to break down. Newsmax, a mainstream U.S. news agency, just floated the idea that the U.S. government should invest $1 trillion into XRP as a way to pay down national debt later. That's right. They actually suggested Washington could use cryptocurrency to solve the debt crisis. And whether you think it's insane or brilliant, this is a sign that the conversation around digital assets has reached a whole new level. Now, before you roll your eyes, let's slow down and unpack what this really means. Because even though the idea sounds outrageous, it's worth understanding why this conversation is even happening. When national debt is exploding, interest payments are skyrocketing, and the dollar is losing global confidence, traditional solutions stop working. So, suddenly, talk of crypto as a fiscal rescue plan doesn't sound quite as ridiculous, especially when it's coming from a cable network with millions of viewers. In the clip that started all of this, the Newsmax anchor suggested the government could take a portion of annual tax revenue, about $1 trillion, and put it into XRP. The theory goes that if the government held that much XRP, the value would explode, creating trillions in new wealth that could then be sold to wipe away the national debt. On paper, it sounds like magic. Print dollars, buy crypto, let the market inflate the value, then cash out. Easy, right? Except, of course, that's not how markets, especially crypto markets, actually work. Market capitalization isn't a simple multiplier of money and hasher value out. The Newsmax anchor, like many new to this space, misunderstood how liquidity, supply, and price discovery function in digital asset economics. So today we're going to dig into what would really happen if the US ever tried something like this. Before we do that, though, it's worth noting how huge this moment is symbolically. Mainstream financial media once mocked XRP, called it a banker's scam coin, or ignored it completely. Now, a national broadcaster is not only talking about it, but seriously suggesting the government buy it. That alone shows how much the narrative is changing. The same network that reaches people in Washington, including Donald Trump himself, is now publicly entertaining the idea that XRP could play a role in rebuilding U.S. financial strength. Think about that for a second. If even one policy advisor or presidential candidate takes this idea seriously, it could open a policy debate no one saw coming. A debate about whether digital assets can serve as strategic reserves just like gold once did, and with the 2025-26 election cycle ramping up, that debate could get real traction. So, in this video, we're going to do 3 things. First, we'll break down what Newsmax actually said and where they got the numbers wrong. Second, we'll explore how a government-scale XRP investment would even work, the mechanics, the math, and the potential market impact. And third, we'll talk about why this conversation matters more than most people realize, even if the $1 trillion scenario itself never happens. Because whether you're bullish or skeptical, one thing's clear. When mainstream news starts discussing XRP as a potential tool for national policy, the world has officially entered a new phase. Stay tuned. In the next part, we'll break down exactly what the anchor got wrong about market cap and how such an investment would really affect the XRP ecosystem. Alright guys, let's dive right into the clip that set off this whole conversation. On Newsmax, one of the anchors proposed that the US government could theoretically take $1 trillion, about 1/5 of annual tax revenue, and invest it directly into XRP, which is currently trading around $2.50. The argument was that such a massive investment would instantly multiply XRP's value, potentially turning that $1 trillion into $8 trillion overnight. Enough to wipe the balance sheet clean. Sounds exciting, right? But here's where we need to pause and bring some logic back into the discussion. The anchor used a very common misconception that still trips up even mainstream analysts. The idea that if you pour a certain amount of money into an asset, the market capitalization will automatically increase by the same ratio. That's just not how crypto markets function. Market cap in crypto isn't a pool of money sitting somewhere. It's simply the current price multiplied by the total supply. So, if one person buys a single token at a higher price, the market cap rises across the board even though very little actual cash has moved. For example, if the US government were to buy even $10 billion worth of XRP, it would not linearly multiply XRP's total market cap by 10 times. Instead, what would happen is rapid price slippage, extreme volatility, and potentially total liquidity collapse. XRP's available supply on exchanges, what we call the visible liquidity, is dangerously thin. On major platforms like Binance, you might see only a few million XRP actually available to buy before the order book goes empty. That means that even a single $10 million buy order could send the price skyrocketing within seconds. Imagine scaling that up to $1 trillion. The price wouldn't just double or triple. It would shoot to astronomical levels, not because of real demand, but because there'd be no one left willing to sell. The system would break. Market makers couldn't replenish fast enough. Exchanges would freeze trades and the entire market would enter a frenzy of price discovery. Now, there's another key piece of this the Newsmax anchor didn't quite understand. Liquidity versus supply. XRP's total supply is about 100 billion tokens, but the circulating supply, the part that's actually tradable, is closer to 59 billion. Of that, only a small fraction, likely less than 2 billion, is available for active exchange trading. The rest is locked in escrow held by Ripple or in cold storage by investors who don't plan to sell. So if the US government suddenly decided to buy 1 trillion worth of XRP, there wouldn't even be enough tokens on exchanges to complete the purchase. What would happen instead is a supply shock of epic proportions. Prices could in theory leap into the hundreds or even thousands of dollars per token, not because of real valuation but because of scarcity in the market. Now, does that mean the idea is completely ridiculous? Not necessarily. The concept of the government investing in crypto assets to hedge against inflation or future debt isn't new. Even Donald Trump joked recently about paying off our $35 trillion debt with Bitcoin or something like it. So, the notion of using blockchain-based assets as strategic reserves isn't off the table. It's just that the mechanics are far more complicated than a TV anchor made it sound. Another part of the Newsmax conversation worth highlighting was the suggestion that the government can't control crypto, so it should just become what it seeks to control. That's actually an interesting point. Governments have historically dealt with emerging technologies the same way: regulate them, subsidize them, or ban them. But crypto offers a fourth path: participation. By holding and using these assets, the US could in theory gain influence in how the global crypto economy develops. That's where things get really interesting and where the conversation about XRP becomes more than just price speculation, because XRP isn't just another digital coin, it's part of a global payment infrastructure already tied to banks, remittance, companies, and central banks. If there's any crypto that could realistically be integrated into national policy, it's this one. So, yes, the Newsmax anchor misunderstood the math, but they accidentally stumbled into one of the biggest ideas in modern finance. What happens when governments stop fighting crypto and start using it? Let's imagine for a moment that the United States government really decided to take this seriously, not as a wild theory, but as an actual fiscal strategy. Let's say they wanted to test the waters, not with $1 trillion, but with a smaller, more realistic starting point, maybe $100 billion. What would happen? How would they even do it? And what would it mean for the market? First, the US couldn't just go on Coinbase or Binance and click buy XRP. The market simply doesn't have the liquidity for that. Analysts estimate that the entire visible order book for XRP across all major exchanges might only hold a few million tokens at any given time. If you tried to market buy even a fraction of that $100 billion in one go, it would obliterate the order book and send the price vertical, likely into double or even triple digits per coin within minutes. So the purchase would need to be strategic and gradual. The government could in theory execute it in batches, perhaps 5 billion or 10 billion at a time, spread across multiple exchanges, and over a long period. Even then, the act of quietly buying up that much XRP would attract massive attention. Institutional traders, hedge funds, and crypto whales would notice the liquidity drain and front-run the buys, pushing the price up even faster. This is why many experts, including those who follow Ripple closely, believe that if such a deal were ever to happen, it wouldn't be through public markets at all. Instead, the US would likely negotiate directly with Ripple Labs, the company that holds a huge portion of XRP in escrow. Ripple unlocks about 1 billion XRP every month and usually relocks around 70% of it. That means there's a steady, predictable release of XRP into the ecosystem. Exactly the kind of structure a government would need for a long-term strategic buy. So picture this. The US Treasury Department quietly signs an agreement with Ripple to acquire, say, 10 billion XRP over the course of several quarters. That's roughly 1/10 of Ripple's remaining escrow at a modest price of $2.50 per token. That would equal $25 billion in USD. Ripple could use part of the proceeds to expand its institutional partnerships, while the government could lock up that XRP as part of a digital reserve strategy. Now, here's where it gets even more interesting. Ripple could agree to create a customized Ripplet infrastructure specifically for the US government, a sovereign-grade payment network that integrates XRP and RLUSD, Ripple's stablecoin for instant, domestic and cross-border settlement. It could even have its own name, something like USDNet, designed for internal and international government payments. This network could theoretically be connected to the Federal Reserve's payment rails, giving the government a way to settle massive interbank and international transactions without relying on the slow, costly SWIFT system. And if this happens, XRP wouldn't just be a speculative asset, it would become a strategic liquidity tool for the US financial system. Of course, the immediate effect would be a massive supply shock. If the government were to start accumulating billions of XRP, it would drain what's left of the open market supply. That alone could send the price surging into the hundreds, and that's before any retail or institutional FOMO even begins. Once news leaks that the US government is accumulating XRP, the global demand would go insane. Other nations, the ECB, the Bank of Japan, even BRICS nations, would rush to secure their share before prices skyrocketed beyond reach. At that point, XRP would stop being just another crypto and start functioning more like a strategic global commodity, similar to oil or gold, except digital, portable, and infinitely faster to transact. And here's the mind-bending part, so, if the government were able to push the value of its XRP holdings high enough, say, to $4,500 per token, it could, in theory, use that to pay off the national debt. At 10 billion XRP owned, that's $45 trillion, enough to wipe out the debt and still have capital left over. Now, would that actually happen? Probably not anytime soon. But what's fascinating is that the math isn't completely impossible. It's unlikely. Yes, but not implausible. The digital economy is shifting so rapidly that what seems like fiction today could be fiscal policy tomorrow. So, let's say the unthinkable happens. The US government actually does it. They make a deal with Ripple, purchase billions of XRP, and quietly integrate it into a sovereign payment network. What comes next? The ripple effects, no pun intended, would be absolutely historic, not just for XRP, but for the entire global financial system. The first and most immediate consequence would be global panic and FOMO. Not the retail type we've seen in past bull runs, but institutional and geopolitical FOMO. Every major central bank, financial regulator, and sovereign wealth fund would scramble to understand why the United States just tied part of its future fiscal strategy to XRP. Remember, this isn't a meme coin, it's the only digital asset designed from the start to facilitate cross-border settlement for institutions. Within days, you'd see the European Central Bank, the Bank of England, the Bank of Japan, and even China's PBOC start reevaluating their digital asset strategies. Every one of those nations is currently exploring central bank digital currencies, CBDCs. If the US suddenly integrates XRP into its infrastructure or even holds it as a digital reserve, the rest of the world won't have a choice. They'll need to adopt competing technologies or risk being left behind in global settlements. Now let's break this down practically. Ripple already has deep ties with hundreds of banks across Asia, the Middle East, and Europe. These partnerships use the XRP ledger to move liquidity between currencies. If the US government joined that ecosystem officially, Ripplet would effectively become a de facto global payment standard, competing directly with SWIFT. The United States would for the first time in decades control not just the world's reserve currency, but also the world's reserve payment infrastructure. And that's where the dominoes start to fall. 1. Other nations would start buying XRP. Once the world learns that the US has taken a stake in XRP, smaller countries will rush to accumulate before the price explodes further. This wouldn't be speculation anymore, it would be about strategic survival. Nations would want XRP as a reserve to back their own CBDCs, or to use it for cross-border transactions independent of SWIFT. 2. Ripple's valuation would go parabolic. Ripple as a private company would suddenly become one of the most valuable corporations on Earth. Likely worth trillions in valuation, their network would handle a significant portion of international settlements. They'd be more influential than Visa, MasterCard, or even Google. 3. XRP becomes a Tier 1 asset. Right now, Tier 1 assets in banking include things like gold and U.S. Treasuries, the safest, most liquid holdings a financial institution can have. If governments begin holding XRP on their balance sheets, the Bank for International Settlements (BIS) could recognize it as a Tier 1 digital asset, officially legitimizing it as part of the global monetary system. And that's when things start to move from crypto into macro finance. Because now global trade, commodities, and debt markets could all start settling through XRP-based rails. Imagine oil contracts priced in US dollars but settled through XRP, or massive bond repayments flowing instantly through a blockchain network. Of course, this would also trigger major shifts in geopolitical power. Nations like China and Russia, which have long pushed for alternatives to the US dollar system, would be forced to decide. Do they join the XRP-based system or create their own parallel network? Either way, the world would be split between two digital economies. One led by Ripple and the US, and another led by alternative blockchain systems like China's digital yuan. And let's not forget Wall Street. Institutional investors, ETFs, and sovereign funds would all start treating XRP as a strategic commodity, not a speculative token. That means enormous inflows. And once those ETFs launch, which are already in progress, you'd have regulated investment vehicles driving trillions in liquidity into XRP markets. Now, the critical point here isn't whether all this happens overnight. It's that the mere idea of a government-backed XRP strategy could ignite the next major crypto bull run. Even the rumor of government accumulation could send the markets into a frenzy. And remember, mainstream media has already planted the seed. Newsmax floated it, and millions of people, including those in Washington, heard it. In short, once the first domino falls, once one government or central bank officially acknowledges an XRP holding, the rest will follow, and that's when XRP transitions from a speculative digital asset into the foundation of the next-generation global financial system. Now that we've explored the what-if scenario, what would happen if the US government invested heavily in XRP? It's time to talk about the other side of the coin, the risks, limitations, and real-world challenges that would make such a move incredibly complex. Because while this idea is thrilling to imagine, the path to execution is filled with major hurdles. Let's start with liquidity and infrastructure limitations. As we mentioned earlier, XRP's circulating supply is about 59 billion tokens, but the actual tradable supply on exchanges is far smaller, likely a couple of billion tokens at most. Even if the US government had the funds and approval to buy $100 billion or more in XRP, they physically couldn't do it without destabilizing the entire market. It would create massive price slippage, a total breakdown in liquidity, and an unsustainable price bubble. And it's not just about liquidity, it's about timing and optics. Imagine the political reaction if the US government suddenly announced it was buying crypto, especially XRP. There would be outrage from traditional financial sectors, skepticism from Congress, and massive debate about the legitimacy of cryptocurrencies in general. The Federal Reserve would likely push back hard, as this move would directly challenge its monetary authority. Remember, the Fed's power comes from its ability to issue, control, and manipulate the dollar supply. XRP operates outside that system. It's a decentralized network. If the government embraced XRP, it would effectively be admitting that its own monetary structure is inferior to blockchain-based systems. Another key challenge: market manipulation concerns. The clip from Newsmax casually suggested that the government could either buy, dump, and rebuy XRP to pay off debt. But in reality, such behavior would be seen as market manipulation on a global scale. Crypto markets, while still developing, are under the jurisdiction of financial watchdogs like the SEC, CFTC, and international regulatory bodies. If the US began deliberately moving XRP's price to profit from volatility, it could spark international backlash, lawsuits, and a collapse of confidence in global markets. Then there's the issue of international cooperation. The US alone couldn't just decide to pay off its $40+ trillion debt in XRP without global buy-in. For that to work, foreign creditors, countries like Japan, China, and the EU would have to agree to accept XRP as payment. That would require new treaties, international frameworks, and perhaps even a rethinking of how sovereign debt is structured. It's not impossible, but it would take years of coordinated global effort and unprecedented trust in a digital asset. Now, let's talk about volatility and valuation stability. XRP's price today can fluctuate 105% in a single day. If the US government held XRP on its balance sheet, that volatility would wreak havoc on its reported reserves. Imagine if overnight XRP dropped 20%. That could translate to $1 trillion swing in perceived national wealth. To prevent that, there would need to be mechanisms in place for price stabilization, perhaps through coordinated buying from multiple central banks or the creation of XRP-backed stable instruments. There's also the issue of public perception and trust. Crypto still carries stigma among traditional investors and policymakers. Many see it as speculative or unsafe. If the government started accumulating XRP, critics would accuse it of gambling with taxpayer money on volatile digital assets. The messaging would have to be flawless, framed not as a speculative play, but as a strategic modernization of national finance. The government would need to present it as a way to future-proof the US economy, not chase profits. However, there's a final point that's worth emphasizing. Ripple's role. Ripple is still a private company, and though it operates transparently, it holds a massive amount of XRP. If the government wanted to engage directly with Ripple, questions would arise about favoritism, centralization, and potential conflicts of interest. Lawmakers would demand assurances that the deal benefits the American public, not just Ripple's shareholders. But let's be clear, none of these challenges make the idea impossible. They just highlight the scale of what we're talking about. Transforming XRP from a retail-traded crypto asset into a tool for sovereign debt management would require deep structural reforms, international alignment, and massive technological investment. And yet, for all these obstacles, the concept remains intriguing. The idea that a digital asset like XRP could one day play a part in national or even global debt resolution isn't as crazy as it sounds. In fact, with tokenization, CBDCs, and blockchain integration accelerating faster than ever, this might just be the beginning of a new era in finance. Now that we've dissected the mechanics, possibilities, and challenges behind the idea of the US government investing in XRP, let's step back and look at the bigger picture, what this really means for the future of XRP, crypto adoption, and the global financial system. Because even if this exact scenario never plays out, the fact that it's being discussed on national television tells us something massive about where things are headed. Think about this. Just a couple of years ago, major media outlets mocked crypto. Bitcoin was dismissed as rat poison. XRP was seen as a niche banking coin, and the idea of government adoption was laughed off as science fiction. Fast forward to now, and you have mainstream US news networks like Newsmax openly discussing XRP as a potential tool to reduce national debt. That alone is a paradigm shift. Even if the anchor misunderstood market cap dynamics, the conversation itself plants a seed, a powerful one. Because once the idea enters public discourse, it spreads. Politicians hear it, advisors talk about it, and the narrative evolves. Suddenly, XRP isn't just a cryptocurrency. It's being framed as a potential monetary instrument. Now imagine the effect of that narrative spreading across global media. Other countries will start paying attention. Financial analysts, think tanks, and policymakers will begin to explore digital debt management strategies. And in that process, XRP will continue to appear again and again as the most logical candidate given its established infrastructure, speed, and partnerships. Let's also not forget the timing of all this. Ripple is hosting its Swell Conference, an annual event that brings together executives from major financial institutions, payment networks, and even government agencies. This year, names like Franklin Templeton, BlackRock, KK, Citi, DBS Bank, Societe Generale, and even Nasdaq CEO are on the list. That lineup doesn't happen by accident. These are the very people shaping the future of finance, and they're all gathering around Ripple and the XRP ledger. So what's really happening here is the mainstream normalization of XRP as a legitimate financial tool. Even if the Newsmax story was speculative, it signals a broader cultural and institutional shift, one where crypto isn't dismissed, but debated seriously as part of national economic strategy. From a market perspective, this is monumental. Narratives drive markets, and narratives like this ignite bull runs. Think about what happened when Bitcoin ETFs were first floated. Prices surged not because the ETFs existed yet, but because people started believing they would. The same thing could happen here. Just the idea that the US might one day use XRP for debt management could trigger massive institutional FOMO even before any official policy ever takes shape. For retail investors, this means one thing. We are no longer early in the ideal, but still early in adoption. The window where XRP is still seen as speculative is closing fast. Once institutions and governments start treating it as infrastructure, not investment, the price dynamics change forever. XRP will move less like a crypto and more like a core liquidity asset, similar to how oil or treasury bonds behave. And let's not overlook Trump's involvement. Newsmax is a network that Donald Trump reportedly watches closely, and his recent comments about paying off the national debt with Bitcoin or something like it suggests that digital assets are firmly on his radar. Combine that with the reports of Brad Garlinghouse potentially joining a new cryptocurrency advisory council in a future administration, and you can start to see the pieces forming a pattern. We're heading toward a world where crypto and state finance are no longer separate, where blockchain assets underpin national and global systems. XRP, with its real-world utility, deep institutional integration, and regulatory clarity, stands at the center of that transformation. So whether or not the US government ever actually invests $1 trillion in XRP, the conversation itself marks a turning point. It shows that the financial establishment and now even political media are starting to take XRP seriously as part of the solution, not the problem. And that's the key takeaway here. It's not about whether the Newsmax idea is literal. It's about what it represents: mainstream acceptance, institutional readiness, and a global shift in thinking. Because when media outlets start talking about XRP as the key to paying off US debt, it's no longer a fringe theory, it's a glimpse of the future. One where blockchain isn't just the next step in finance, it is finance. So stay alert, stay informed, and most importantly, stay ready, because the tides are turning faster than most people realize. XRP isn't just part of the conversation anymore, it is the conversation.